Sir, participants are joining. We will wait for 2 minutes.
Sure.
Yeah.
Hello, yes, sir. Good evening, Chandni here.
Hi, Channing. Good evening.
Sir, all set for the call?
Yeah.
Yes, we'll keep the call for half an hour.
Yes.
Yes.
Sir, I think we can start.
Yeah. Sure.
Good evening, everyone. Thank you on behalf of Kirin Advisors. I welcome you all to the conference call of Inspire Films Limited. From management team, we have Mr. Yash Patnaik, Chairman and Managing Director, Mr. Amit Sen, Executive Director, Mr. Balachandra Kadam, Chief Financial Officers. Now I hand over to call to Mr. Yash Patnaik. Over to you, sir. Thank you.
Hi, ladies and gentlemen. Good afternoon, and thank you for joining us today for Inspire Films Limited inaugural conference call to discuss the financial performance of the second half of the fiscal year 2024. I extend a warm welcome to each one of you, especially considering the milestones of our listing on NSE Emerge platform. Before we delve into the specifics of H2 FY24, let me provide a brief overview of Inspire Films Limited. Since our inception in January 2012, we have been dedicated to create immersive storytelling experiences across television and digital platforms. We are a dynamic force in content creation, production, distribution, and exhibition, specializing in Hindi GECs, that is Hindi entertainment channel televisions, digital content, and digital productions. Our operation spans three core verticals. One is television, that is Hindi GEC, digital content, which is OTT, and regional content. Through our commission content model, we deliver tailored content solutions for clients, while our original content model, branded as Beyond Originals, in collaboration with Beyond Dreams Entertainment Private Limited, allows us to co-produce valuable intellectual property. Additionally, our licensing and distribution model makes award-winning content accessible globally to the audiences. With over 35 successful television shows, web series, we continue to partner with major platforms like Sony Entertainment Television, Jio Cinema, Hotstar, Disney Plus, Hotstar, Star Plus, Colors, across the platforms. Our most recent listing at NSE Emerge platform in October 2023 marks a new chapter in our growth and impact in the content industry. Coming to highlights of H1 FY25, we secured global OTT deal for a 20-episode series, which we expanded into digital entertainment by adapting a best-selling novel, aiming to captivate global audiences. Major distribution deals with Indian Broadcasting Network, that is one of the leading GECs. We have signed a deal to air 3 web series on a leading Hindi GEC. boosting our revenue and audiences with diverse genre offerings. Launch of digital label Freshmint. We launched Freshmint to engage India's youth with relatable stories, opening of new revenue streams across digital platforms for us. Freshmint goes live. Our digital label debuted with the premiere of Aukat Se Zyada, making our entry into the youth-focused digital content. Production begins for new youth series with global OTT partner. Strengthening our global presence, we began production on a new youth series, highlighting our innovative storytelling and high production value. Coming to our financial performances, the company reported 4 crores for H125 with an EBITDA loss of 2.36 crore and net loss of 3.76 crore for the same period, impacted by the industry-wide challenges stemming from ongoing consolidations that delayed the launch of new shows across the sector. Although production commenced in the latter half of H1, we incurred the full production expenses for one of our shows, but billing for this project will reflected in H225, offering a positive impact in the upcoming quarter. In response, we launched our original series, Aukat Se Zyada, alongside our new YouTube channel, Freshmint, aimed at dynamic youth-oriented content. We are also broadcasting our footprint on television on OTT platforms, which will help diversify our portfolio and enhance our market positioning. Additionally, we are investing in a slate of original content to capture opportunities as market consolidations has stabilized. With greater clarity now emerging around consolidation, we have observed a positive rise in new show announcements from leading networks and are pleased to have secured a significant share of these shows inflows. This has strengthened our order book, currently standing approximately 35 crores, and positions us well to continued robust growth throughout the remainder of the year. We are optimistic about our growth trajectory, supported by a solid order book and well-curated content pipeline. I appreciate your attention, and now I invite the participants in the question and answer session. We're eager to address any questions that you may have. Thank you.
Thank you, sir. I request to all participants, please write your questions in Q&A session or raise your hands. Sir, one question is there from Deepang Kamdar. What is the order book looking like for H2 FY25 and following years?
Sorry. As we have mentioned, we have secured a major production agreement with one of the leading GC channels. And that is one of the top 3 channels I'm talking about. And that is close to that one project is close to 35 crores. And there are 2 more projects in the similar vicinity are in the final stages of negotiation. And yeah, the year after this 25-26 is looking much bigger, much larger for us. Second part of this year, that is the next 2 quarters, are also looking robust because a lot of projects which were supposed to land last 2 quarters got delayed because of the consolidation that was happening around, should help us gain good numbers.
Thank you, sir. Could you share an update on your current order book and how much of it is projected to be completed in H2 FY25? Question is from Anandi Mittal.
Hi, Anandji. Next, the last 2 quarters, we completed one series for one of the leading international platforms, OTT platforms. The book will show 50% of the value which was not captured last year will be shown this year, this quarter itself. And coming back to the new order book, putting numbers is, I don't think I should be able to put the numbers, but almost 60% of the TV show that you are doing, which is going on for in 4 to 6 weeks, should reflect in the next 2 to 3 quarters. And yeah, it's most of the projects are now getting into the pre-production and production stage.
Okay. Uh, Mr. Deepak Kamdar is asking, can this be specifically answered in terms of numbers, please?
Mr. Kamdar, I'm afraid I will not be able to put numbers as of now. I'll have to go through the numbers and see whether I can put the numbers in a forum. But yeah, as I said, our television projects generally I'll give a generic numbers that the two project sizes we have. A daily soap, which is valued anywhere between 7.5 lakh to 10 lakh per episode. We produce around these days you have Monday to Sunday telecast 7 days a week. That means around anywhere between 25 to 35 crores is a daily soap budgets per year contractual amount. And the OTTs vary from 7 crores to 45 crores. So we have a couple of projects in television and one show in OTT, which are in the final stages of commissioning. That will give you a rough idea about what numbers we're talking about.
Next question is from Rajesh Bhatia. How do you view the potential of international distributions and co-production partnerships?
Hi, Mr. Bhatia. Definitely, international distribution is something that is opening up with content. Till 2 years back, Turkey used to be one of the biggest content distribution country, and post the disturbances in that part of the world, Indian content are getting more in demand. So we are expecting a lot of content going from India to global platforms and players. Also, Indian diaspora is quite increasing internationally. Also, as we're talking, there are more than 91 countries where Indian content is consumed. We are hoping we'll be able to break some new barriers and reach out more audiences, more countries, more languages. As far as co-production is concerned, yeah, we are open to that. We will be attending this coming MIP TV in London in February this year, the coming year, and we'll look forward to opening negotiations, discussions with international players where we can get in co-production with them.
Ms. Tara Kaur is asking, how does company assess the risk and reward of producing content of international markets?
Hi, Taraji. Generally, there are two kinds of content business that we do. One is commission content, and one is original IPs, which one produces and then licenses or sells rights. Commission contents are the secured ones where you pitch a concept, you pitch a full story narrative, casting, crew, production, design. Then once you are the platform commissions, then you produce. So the risk factor is almost, you can say, zero. And as far as the produced content is concerned, they're high risk and high return basis. So we will go, but in original IPs, we are going more cautiously. But yeah, with co-productions opportunity opening up, we will explore them more.
Okay. Next question is from George. What are the long-term goals for a fresh mint and how will you monetize this platform?
Hi, Mr. George. Freshman, we will continue to create content for 18 to 24 age groups, and that is a audience. We don't have much long-form contents available. We are in talks with, as we are talking today, we are in talks with some of the leading platforms and brands where we're pitching our ideas and how those brands can, be integrated with our products, our narratives. And there are basically three kinds of revenue streams that one looks at in platforms like a Freshman. One is you must be thinking how YouTube is going to be beneficial. YouTube revenue is actually very small part of it. The major chunk of revenue comes from brands. Second comes from content syndication. What we have done with Freshman, we have geo-locked the YouTube channel. That means outside India will not find Freshman content. You will see the YouTube channel. You will find some of the promos and teasers and all, but content consumption, you can't consume content of Freshman outside India. So that allows us to negotiate with platforms outside India to take our content. The rights could be for television, for broadcast, for streaming. So there are multiple options one has, including dubbing and format rights. So it's early days. Yeah, we are looking at exploring Freshman much larger. I am happy to mention that last month at MIPCOM in Cannes, France, that is, the Indian magazine, which represents the entire Indian content market, called Pickle, they featured us in the cover page as a destination to look out for. And they gave us a center spread on around 8 pages of story based on Fresh Mint and Okatsiada. And that's just a beginning. And we're happy that with all your support, we could initiate this step of Fresh Mint and taking it forward.
Okay, sir. Miss Aditi is asking, can you discuss any recent changes in content pricing or budget allocation due to market trends?
Hi, Aditi. The pricing has not been much changes in terms of average pricing, but yeah, we are conscious of clubbing certain high budgeted programs with our average size programs, so that the revenue gets pushed up in the coming years. It's all most content business is more about volume, but yeah, there are some tentpole projects which fetches better revenue. So we are creating a nice mix of average budgeted content and premium content. So yeah, those are like most of the premium contents are basically about with a good top line actors, top line production value, and locations, music. So yeah, eventually, at the end of the day, uh, uh, average budgeted content will be more in volume, and tentpole or premium content will be less, but they will generate more value.
One more question from her. What are your plans for brand partnerships or sponsorship, especially on digital platforms?
See, when we are talking to brands on YouTube or any other platforms, we generally decide on the content which will resonate with. We first initially we talk to the brands to understand what is the messaging they are looking at for their products, and we match with the content library that we are developing. So there are some sports content which is going to, not much has been done. Sports fiction we are getting into with some of our new projects in Freshment. So we're talking to brands which are, shoes, your fitness equipments, fitness drinks, some, smartphones. So yeah, we are taking briefs from the brands who are looking at collaborating with content on YouTube space or digital space. And then we're trying to create a mix and match and, take their support to create content.
Okay, one more question from her. How are you managing cash flow and working capital requirements amid increased production activities?
Yeah, so it's actually a mix of two, three things. One is in certain platforms, we get a certain kind of advance payments and different tranches of payments as we go on production. We also have banking facilities where we have OD facilities where we dip into them, when we need cash flow. So this is a mixture of advances from clients and reserves and what we can avail from the banks through our OD facilities and different facilities that we generate.
Okay, next question is from Amit Chaudhary. How does Inspire Films plan to mitigate the impact of delayed show launches in the coming quarters?
Amitji, fortunately, the consolidation part is behind us. You must be knowing about all the consolidation that has happened in last 3-4 months or 6 months. The process started almost a year and a half or 2 years back. I don't see much more consolidation happening in coming years. But yeah, we have initiated the process of setting new verticals. One is licensing model, which allowed us to explore new avenues for us to generate revenue, which we will put more efforts going forward. So far, we have done mini series from platforms to platforms. We will get into feature syndication also, that is feature film syndication, long form syndication, international syndication, where the volume can be increased. Second is the original IPs that we are working on or we will be generating through co-productions. Those will help us generate revenue on a consistent level. The best part of original IPs is once it takes maybe a month, maybe 1 year, 1.5 years to break even in original IPs. But yeah, after that, you don't have investment, you just keep getting the licensing fees. So these are the two primary areas that we are looking at to create a solid revenue stream for us, irrespective of industry dynamics changing.
Next question is from Chaitali Deva. How does Inspire Films evaluate the success and the profitability of each new content launch?
See, again, the commissioning content is something that platforms or broadcasters, they help us with the data, how a project is delivering. But yeah, through the process, there's a lot of things that goes on, like the one that we're doing currently for one of the leading broadcasters. In fact, I just came from that meeting before our meeting. There's a marketing team, there's a OEP team, there's a sales team, business team. They take the content deck to the advertisers, the market through focus groups and all, and they get a sense of how the market is reacting to the content that we're talking about, the characters, how they're resonating with the audience. They are the parameters that is pre-launch, and once the show is launched, we see what kind of audience footfalls we have on our show, what is the time spent we generate. Time spent is if the content's length is 22 minutes or 25 minutes, how many audience are coming. That is the reach, we call that. The reach is a combination of the time slot and the platform's reach in certain markets. The markets are also divided into four major categories like ACC, A, B, C, D, and in that also age groups. Then you have your market sizes also, 1 million plus and 10 million size markets. And once the shows are launched, we see how many audience are coming to watch the content and for how long they're watching. So we measure them on a minute basis, from 8 minutes to 18 minutes at time 22 minutes. Some of our shows have generated 19-20 minutes of watch time out of 22 minutes of content. So those are the parameters. And audience reactions through social media is very generic, but you don't get the exact numbers. But the main numbers we generally get from the broadcast and the platforms.
Question is from Mr. Babu George. Any new launches planned?
Yeah, Mr. George, as I mentioned, one of our major show that we produced, the production is completed. We are expecting to go live with those episodes. First season one, we finished 2 seasons of that series that we just completed production. Maybe January or February, we should have the first season releasing, and maybe after a month or two, the second season will be released. Both the production of both the seasons have been completed, 10 episodes each, that is 20 episodes we have done. And there are some interesting casting in that. The audience, I'm sure, will like them. And also in the new shows, the one that we're talking about, the GEC show, Hindi Daily Soap, uh, with a very rustic, interesting background, very high drama, high octane drama. Like that, we have done some very high drama shows like Veera, Veer Ke Ardas Veera on Star Plus, Jana Dil Se Dur, Kuch Rang Pyar Ke Aise Bhi. So these are very high octane drama series that we're doing for this broadcaster. That we are expecting that to go on air somewhere in January or February. I'm sure the broadcasters will be the right people to do the announcements. But yeah, that's the first quarter calendar year, first quarter on air is expected. Few others are in development stages. Once we get more clarity on the release dates, we'll be able to get back to you. Thank you.
Priya Jain is asking, what is the revenue structure for all three business verticals?
Hi, revenue structure. Currently, we were till recently we are more dependent on television, but gradually television I think will remain around say 40 to 50%, and OTT will be around say 30 to 40%, and the rest will be through start with YouTube and licensing. That part may grow much bigger going forward.
Next question is from Mr. Deepak Kamdar. How does the company plan to maintain its capital adequacy considering the current slowdown?
Deepak ji, with more projects coming in, see, fortunately, the dynamic of a business, once we get projects, the fund generally doesn't get a barrier for us. We have been in the business for close to two decades now. Yeah, where the challenges come to create a lot of original IPs, where the upside is much higher and the value you add. Second, to create a lot of projects pitch ready. As we're talking, we have around 14, 15 shows which are pitch ready. We have invested and we have believed in those projects, and we are going to different platforms, approaching them. So we'll explore primarily banking support for the working capital apart from the advances from the clients. And I think that is the initial thoughts we have for the next year or so. As we keep growing, we'll see that what are the other avenues that we can explore.
Next question is from Anandi Mittal. How does Inspire Films plan to diversify its revenue streams within the digital content space?
Uh, 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 I think I have addressed this question in the previous questions of yours. Diversification will primarily happen when we expand ourselves to global market, global as well as regional market. Right now, we have been primarily operating on Hindi space. Though we have done some regional content, we have not been more aggressive towards it. We believe that because the market was little volatile, there was a lot of thaw that was happening. We went a little slow on, going away from the exploring the long distance content markets. But once we consolidate the current Hindi market, content market, we will explore them. As far as Freshman as a platform is concerned, we have opportunity once we have 4 or 5 shows with us, and some shows that we'll be opening our windows for people who have produced content and they're looking for distribution partners. So Freshman will also release ready content which will match our content programming, and we will also look at exploring the dubbed versions of those content. Like you will find, we will be at some point of time, you'll find Freshman in Telugu, Tamil, Malayalam, Bengali, and different languages. So those are the additional revenue streams that we'll be able to generate.
Okay, sir. Tara Korji is asking, can you elaborate on your co-production strategy within Beyond Entertainment for Beyond Originals?
See, Beyond Originals, we have now shifted all Beyond Originals to Fresh Mint, which is 100% label of Inspire. We're not doing anything in Beyond Originals. Fresh Mint is going to be the flagship YouTube channel for us, for original IPs for the time being. See, the more content that we will be targeting, we'll continue to target the 18 to 24 age groups in this kind of content. And I think once we have more brands in place, we'll be able to divulge more about the content and the schedule for the calendar.
Diya Patel is asking, could you break down the contribution of each business verticals like TV, OTT, and regional contents to revenue?
I just mentioned, Divyaji, we are currently doing 40 to 50% television, 30 to 40% around digital content, and the balance, the rest is between distribution, licensing, and original IPs for YouTube. The dynamics will keep changing as the market keeps opening up. Yeah, those are the numbers currently as of now. I can share that with you.
The next question is from Arjun Verma. How do you anticipate the recent consolidation in the content industry will impact your future operations?
Arjunji, the consolidation was actually long-awaited consolidation, and this only helps the platforms go much more aggressive in reaching out to bigger audience. If you look at the combined forces of the two large platforms, they have come together. The reach is quite huge, and they, with the kind of global footsteps they have, the global impact and reach they have. Also, the other platforms which are there doing well are also now everybody is going to get more aggressive in reaching out to audience, because audience have not actually got much content in the last year and a half. They are hungry for new content. I can tell about myself as a content consumer also. Last year or so, we have not got much content, as much content that we wanted to consume ourselves on weekends. So I think good times are here. The consolidation has helped. More decisions are going to be taken, more content will be produced, and we will get more opportunity to create more content for the audience.
Okay, so last question is from Anandi Mittal. Can you outline your expected capital expenditure for a few content development over the next few quarters?
Anandji, again, there are a lot of content which already we have developed, which are pitch ready. Having said that, we will be looking at buying some more book rights, some life rights, some licenses. So I think we'll get a little more better idea in the next month and a half, when we discuss them with the possibility of alignment with broadcasters and OTT platforms. So as per their aptitude and their interest, we will be able to put a number to it.
Yes, sir. I think we cover all the questions. So can we conclude the call?
Yeah, thank you. Thanks a lot, everyone. Thanks for coming and joining us, and looking forward to seeing you soon. Thank you.
Thank you everyone for joining the conference call of Inspire Films Limited. If you have any queries, you can write to us at research@kirinadvisors.com. Once again, thank you everyone for joining the conference call. Thank you. Thank you, yes, sir.
Thank you.